I had this company suggested to me by a viewer of the channel, and I couldn't help but dive into it out of pure curiosity. And to be honest, I found more questions than answers, but what I also found was a pretty healthy company that seems to be growing and has a few good trends going for them, except their stock price. It kind of tells me a really different story. So, Box Holdings essentially make homemade cakes that don't contain any eggs. Now, we will look later on into the business entirely, but for the start here, their ticker symbol is CBOX. They are trading at £1.15 at the moment, and over the past 5 years, they have had a gigantic leap all the way to November of 2021, nearing £4 a share, only to plummet the whole way down to about £1.40, recover, and once again plummet down to nearly £1 per share, almost dropping them into penny stocks. Now, why that's the case, we'll have a wee bit of a look-see into it later on. Dividend yield sits at 6.72%, which obviously the yield is abnormally high because they've had an abnormally high drop. They have 155 employees, and they mainly franchise out, so I'm sure that number is actually a lot higher. And their website, egg-free cake. It's just interesting. Now, let's jump into the financials of Dividend Max, one of my favourite websites for dividends. If you had 100 shares of Box Holdings, which, as you know, there would be about £115, you'd have got a previous payment of £5.10 back in September if you owned the shares before the 25th of August. And if you own the share on the 16th of November, so the day before the ex-dividend, you'd have got £2.63 for 100 shares. For 1,000, which would be about 1,115. You can see the amounts there. Now, looking at their annual dividend chart, it doesn't look that great. They have only been paying dividends for a couple of years. It rose in 2020, in 2021, and it rose again in 2022. It's projected, these are projections now, I don't see into the future, that they're continued to grow into the next couple of years. But we'll look on to my next favourite website, Simply Wall Street. We'll see, will that be the case? So using their snowflake analysis, we can see that they score pretty high across the board, except future growth, but we'll see why that might be the case. They are a flawless balance sheet company with a solid track record, and they pay a dividend. They're trading at 54% their estimated fair value. Revenue is forecast to grow. Earnings have exploded over the past year. Now, what's the risks? They have a high level of non-cash earnings, an unstable dividend track record, a very volatile share price, and not a high market cap. Now, you can see some of their other competitors, such as Naked Wines, Virgin Wines, and, those two would probably be the closest to it. The thing about this company is, they are traded on the alternate investment market, the AIM, not the FTSE. So it is a much smaller company, but news doesn't seem to be there doesn't seem to be anything major that happened that caused all these downfalls. I have looked quite deep, and don't get me wrong, if there's any viewer in the comment section wants to tell me a bit more, I'm all up. I just couldn't find that much real solid news to explain their drops in share price. I imagine it's just with the economy, because their last major drop there, that was the pandemic. Okay, they dropped nearly 50 pence, and then the drop here, well, they were dropping in January before the war even began. So the war in Ukraine, I wouldn't say had too much. Well, it definitely affected it. It affected a lot of stocks. And then the drop there from August into September, we've seen a lot of UK companies tank in the last 30 days. So, okay, maybe it's one of them companies that thrives in the good times, and when things are looking bad, they don't. Maybe I'm not too sure. So we'll continue down. They have 6.31 in earnings, 32 million in revenue, and a market cap of 46 million. Pay ratio 7.3. You can see all the stats here. They have a net profit margin of 19.15%, which isn't too bad. They also franchise an awful lot of their business as well, which could add to their overall higher profit margin. Payout ratio of 48% and a yield of 6.6. Valuation, they score 4 out of 6. And against other peers like Naked Wines and Virgin Wines, which I won't compare Marks and Spencer's to them, but just that kind of can order online. Naked Wines, I don't think, has any stores. It's more of a subscription service. But if you want to call them peers, CakeBox aren't doing too bad. Now, down to their valuation here. They have a fair value and a discounted cash flow model of £2.53. Now, they have achieved that in the past. Heck, they've achieved £4, but that would make them 55% undervalued at the moment. But we'll see with intrinsic value that's not entirely the case. That gives a slightly different formula. Down to future growth, we can see that they score 1 out of 6. Not spectacular. They are projected to grow. Earnings haven't really been projected as such. Free cash flow is, again, projected to kind of remain steady. But our revenue overall seems to be growing. Now, their past performance is nearly 20% annually. That is quite the significant growth. Going from 5.5 million revenue and 1 million in earnings in 2016, all the way up to present day, where they have 32 million in revenue and 6 million in earnings, and they maintain a very healthy 15 to 20% profit margin year on year. Free cash flows also increasing. Operating expenses, well, you'd expect that to increase, and cash from operations also. It says about non-cash earnings, but I can't see what those earnings were exactly. Now, there's perhaps some sheet somewhere that explains why that might be the case, but I'm just looking at it. Even if you take away the non-cash earnings, they still are growing year on year at a very, very steady pace. Financial health, they score 6 out of 6. It's very rare that you would see a company score this well on their financials. They have nearly 12 million in short-term assets to 4 million liabilities, and again, 13 million to 4.8. They also have a really, really high debt-to-equity ratio of 8.2 at the moment and growing year on year. And they seem to be actually lowering their debt as well. And the debt's well covered from operating cash flow, and their interest payments are also extremely well covered. Quite a lot of receivables, inventory, cash, physical assets, and long-term holdings. I don't see many problems to this company. This actually looks like a really healthy company. I don't get it. I mean, I suppose it's on the smaller end of the scale, but I can see why there was a lot of hype and mention of it in certain forums. I didn't see them on the Motley Fool or anything. I just seen them on just general forum sites. We can see here that they score 4 out of 6 in their dividend, so it's notable, it's high, not stable, not growing, but coverage is perfect. We can see here that they were growing it all the way till the pandemic, where they cut it, and then they went on to increase it again. Now, the yield was 2.9% back last year, but they were nearly at £4, or between £3 and £4 a share. Now that they're £1 a share, their dividend yield has spiked to 6.6, but you can see that their dividend per share hasn't actually grown all that much at all. Just the yield has. Now, supposedly there will be a cut into next year's dividend. That is a possibility, but again, I don't see. The only thing I would point out is their cash payout is 73%. Now, some people might argue that is a high percentage of cash to be paid out in dividends, especially for a company that isn't, super mature. It is a relatively new company. It only started in 2008, and by now it's on the stock market. So that's something to bear in mind. Now, someone did sell out, or no, they didn't sell out. It was actually is that the guy that runs it? It's the co-founder. I'm not going to try and pronounce the name, but 3 million shares he sold 12 months ago for nearly 10 million. And he actually picked up the exact same, or a 250,000 shares just recently there. Let's see, who owns most of it? Well, obviously he owns most of it, followed by several other companies. Oh, this is one of the very rare times you don't see BlackRock and you don't see Vanguard anywhere. Wow. Hats off. This is the first time I've ever seen that before. But there's AXA and there's Hargrave Hale Limited sitting at near the top in this one. Well, it's curious. Now, let's jump over to intrinsic value and alpha spread for CakeBox Holdings. We can see that it gives it a £1.39, so it's 17% undervalued. Best case, maybe £2.26. Worst case, it's maybe even overvalued at this stage. We can even see relative value gives it around 96 pence a share. So that is something to bear in mind, but it still scores out pretty well across the board. It seems to be a very viable company. Now, obviously, none of this is financial advice, but I honestly, I'm impressed by the financials. Kind of similar on par with Pets at Home. Obviously, two different, like Pets at Home's a juggernaut compared to these guys, but it's still, they're a financially solid company. Here's their website. Eggfreecake.com. Is it egg free cake? I think so. So they do cakes. If you didn't expect this. Naked cakes, EID cakes, themed cakes, lots of cakes. And they're egg free. So it's, yeah. I mean, look, we can order a cake. Select options. Pick it up from one of our nearest branches. Let's see how many branches they've got. They do have quite a lot. That actually looks like a lot of branches. Okay. Well, let's see about us. I just want to see a wee bit of history before I move on in this. The company began in 2008 with one small store. In 2012, they now have 195 branches, which quite a lot are franchised out. We like to think of each other as family. Okay. Special cakes. They're egg free, which is obviously... Oh, so that means that means vegetarians, strict lacto... I know there's a lot of people and there's a lot of diets and eating, a lot of people can't have eggs, essentially. So I would say they cater to an awful lot of people, like an awful lot, especially in some religious grounds as well. So... there you go. That's pretty impressive. That's definitely one of the ones I want to throw back to the viewer. Let me know what you think in the comment section below on CakeBox. I'm so curious. Tell me what you think. You've seen everything that I've seen there, so tell me. I'm curious to hear your thoughts. Anyway, for anyone else watching, there is... the stock brokerage that I use is Trading 212, where you can find the likes of CakeBox by searching up the ticker symbol CBOX. You can get access to a lot of advanced charts. You can set timers for the prices when the market opens. Gives you a wee bit of a breakdown on the company as well, and a lot of really useful charts. All of which they're actually a really good cash generating business as well. It's rather fascinating. I'm fascinated by this one. But that is CakeBox Holdings done and dusted. Let me know what you think in the comment section below. I'll see you all in the next one. Be sure to hit the subscribe button if you enjoyed. Thank you.